Okay, so I haven't done this in a couple of months really. I was really surprised what was happening with the market, and I started going out on hikes with my wife in the morning on Sunday morning, so I wasn't getting into it. So, but now it looks like we're going to see, for at least for the first half of the year next year, 2022, we're going to see strong price growth. Now I'm thinking that the prices will peak next summer. I thought they were going to peak last summer, but was kind of surprised. What I thought was we saw the number of homes for sale here is going up and up. I thought it was going to continue going up like that, so it'd be here now. But it didn't happen. It's kind of leveled off. You can see that down here when we compare 2021 to 2019. It's going up really steeply, the number of homes for sale. It's number for sale. I thought it was going to continue like that, but it leveled off. We The main reason was the sales were higher than I expected. It took me a while to figure out what was going on. It looks like it was investors. The number of investors buying went up. And I was kind of looking at like 2005, what happened that year. And what happened then is a lot of investors started putting their homes on the market in the fall. But this fall in 2021, the investors got into the market a lot more than they did even earlier in the year. Okay, let's look at this graph, new listings weekly from the Crawford Report to tell you the story. This is new listings, so it's what's hitting the market. And this is 2017, 18, and 19. To give you an idea, this is the normal, so to speak, of houses hitting the market. Then let's add 2021. And that tells the story. So for the first month, particularly, January was the peak COVID deaths in Arizona. People weren't putting their homes on the market like normal. And that lasted until February, March. And then it was kind of a normal market for a while. And then in June, July, August, it's kind of catch up. We're getting more homes hitting the market than normal. I think, well, they didn't, those people that didn't put it on the market back here were putting it on the market in the summer. And I thought that my expectation was that would continue, but it didn't happen. We got back to now that in the fall that the number of homes hitting the market were similar to a normal year. Here's the other side. So we just look at the number of houses hitting the market. This is listings under contract, which is I'm going to use as a proxy for sales, which I just like this graph better. But this is 17, 18, and 19, so that shows you typical listings under contract. And then 2020 hits, and we get total number of homes for sale is way down, and then it's way up. Part of that could just because there was so much work that they were staying under contract longer. But nevertheless, you can see there's a huge number of sales going on, and that's because by this point, we got to November, the interest rate had been falling for 2 years, so that was having a big impact. So let's add 2022, 2021 now. So it starts out. Let's go to 2020. So it starts out that sales are higher. And I just showed you earlier that the number of listings hitting the market were really low, but sales in January were really high. So that's the peak reason for such a crazy market and inventory falling so quickly. Then it becomes kind of normal for a while. And then this is what's surprising me is what's going on here. Starting in August, but really through the fall, we're getting more sales than I expected. My expectation was we'd get fewer sales because prices were so high. We were getting more sales. And I couldn't figure out for weeks what was going on there. And it looks like what's happening was it was just investors were coming in. They were coming in a lot higher in the fall than they were earlier in the year. Okay, and finally, let's go down to this is the, for November is 450 was the median home price for single family detached homes, and it's going up. In a typical year, this would be more like a typical year. It's flat in the fall and would go down here. This is a 2019. It went up because, like I said, the interest rates had been falling for a year by this point, and we're starting to see it's adding a lot of strength to the market into the end of 2019, and then also into 2020 as well. So what we end up here is a huge increase, which makes me think an inventory is super low. Like up here, inventory, the number of homes for sale is half of what it was in 2019. So that tells me we're going to get price increases next year. I'm going to guess ballpark 10%. And now I'm thinking it might flatten out or likely flatten out next summer instead of last summer. And but the thing that I don't understand is the investor market. That's usually, let's say in like the year late 1990s, we get 3% of sales would be to investors. Now we're getting like 20. It's a huge, huge increase of investor purchases. And that's what's driving the market so strong right now. And also, given that we have upward momentum at the weakest time of the year, that's going to show that we're going to have a strong year. So I just pulled the number, a nice round number, 10% is the increase between now and next summer. Ah, it kills me that first-time home buyers have to pay these prices. What really convinced me the story that this was driving this was investors was there's a a woman I really like to follow. She follows new homes, Ivy Zellman, and she used to work at Wall Street. She knows that, and her thing was that she thought she was the first one to think that we could be going into building too many new homes, and that was like last summer. She was way on top of it, and actually she was way on top of the bubble in the 2000s as well. But so her thing is she was watching that it was becoming home, in her case, new homes was becoming popular with basically I'll say Wall Street, with institutional investors, because she's tied into that market, and she was kept saying that real estate was becoming the something like the prettiest girl at the party was the expression she kept using. I didn't get what that meant, but then I kind of figured it out. Was like, oh, it's just in style. That's for whatever reason, that's what Wall Street likes is now real estate. Now, what's really worrisome is the whole thing that happened with Zillow, that they can change their minds and jump in, but they can also quickly change their minds and jump out. So that's hard to figure out. So let's say what happens if the economy slows? Do they jump more into real estate? Let's say the stock market falls. Do they do jump more into real estate or less into real estate because they have to be more conservative? Um, that I don't know. But right now I'm kind of keen on the investor market. That they're the ones that I hadn't had pegged, and I really wish I could figure out what they're going to do next year. Great. I hope you found this useful. And I'm kind of rambling here, trying to talk fast and get the information out. But if you found this useful, leave a comment. I love that. Thank you, guys.